All right. Okay. Hey, traders. Well, we're good to go here. We got everything we wanted today. It was clear cut, easy trading. Hopefully, we went over it enough yesterday that you guys were prepared for what was coming. And that was the daily zero test was the next objective of the bears and then which is here. And the bears were, if they could continue to control the market, going to drive daily tension down to zero, and the bulls would defend because they've been in charge of daily tension for a while. It was straightforward stuff. This was meeting expectations like crazy. So there were some other opportunities through the day for intraday little scalps and stuff, a couple points here and a couple points there. But the major thing to pay attention to is the response at the probabilities. Remember, this is the future. So these bulls right here who came in and defended, they are not fighting for today. They're not fighting for into the close. These guys are looking out like 2 days to a month. They are looking at control of the future price, not of the current price. So what I'm going to do today is walk through how everybody was positioned and where the major events were, which was the zero tests. And we had essentially two of them. One right at the open, which you could see there's the trapped orders finished up, and it popped up and it came back to test the expansion bar, probably because the market makers didn't want to carry the crap inventory that they were getting handed, which is being forced to take the short on the other side of a bunch of longs. So it came back, they dumped their inventory, again trapped orders at the zero test. This was very straightforward. You shouldn't overcomplicate it. And remember, a lot of times what the bulls will do is if the bulls see a zero test on the horizon, it's coming in, they wait. And we see this a lot out of these guys. And I've tried to prep you by talking about this every single day every single trade a day for the past couple days. You got to be ready for the zero test. And remember that bulls will do this. When they see it coming in, they'll step back and wait for those zero tests and just pick up that it's the best opportunity. The other thing that you really should have been paying attention to was teeth. It was large teeth. And we talked about this a lot yesterday. Today was teeth. If you notice, if I scroll this back, and this should just be preaching in the choir here, like you guys should all say, yeah, I know, but I'm going to cover it anyway. The origin of this position is here. This is the big origin. It's where it's all operating from. It was the big slide down that scared everybody into an inflation short, and they trapped themselves in like idiots. Then we came back for a root position number 1, and we had a root position number 2 here. Now, this position stops could have been anywhere here, but it was clear that pushing this down through that position would not kill off these. So the teeth were more likely. Now, that's what happened. We're getting teeth, and this is larger teeth. Teeth. You're constantly going to be thinking about teeth. This is a big deal because if you can get the idea of teeth into your head and be able to operate with teeth in there and go, okay, we get the main setups and everything works out and the market pressures those. I have another term that I used to use a long time ago, and I used to call it a fear run. The problem I had with this term is it has two emotionally charged terms in it, fear and run. So you'll end up, instead of using it as a description, saying, this was or was, you start using it as a justification. And this is a problem with terminology that I do my best to be careful about. A fear run, then whenever something moves against you, you just start saying fear run. And the reason for that is because you feel fear and say, oh, well, the market's just running my fear. And so it'll justify holding losers. And that's just, don't ever do that. So I swapped it over to teeth because it looked like teeth, it felt like teeth, it bites you like teeth, and then it goes the right way, and it emotionally will bite you like teeth. So you can think of it as a fear run. They're terrifying all of the people who came in late to the game, and this is a secondary position. Okay, so now let's take a look at the players going through the zero tests and the teeth. Right off the open, you should have noticed decay was moving up, not down. What? The internal energy moving upward. So we're going to look for bears. And the first place bears show up is here. And you can see there is just really not a great correlation between where the bears are sitting and where the signal happens. Like you have to zoom in a little bit, but it was up and it stayed up. And the bears showed up, though their placement was really nice. So the bears get a position here. And you could see the bears absolutely. You see right at that position, right when that position finished, the New York Stock Exchange tension changed character as soon as that happened. Price response, tension response, bears are here to play. The market rolls on down, it hangs out there a little longer than you probably wanted to, but it moves down. The reason this moved down, again, is the market makers. You see this sweep up? It created an EB, or expansion bar, which is short for expansion bar target. And what it is where the price will do the upside expansion bar. It shoots up, and usually everything gets retraced. But there's this section where that it didn't, and that means that the market maker was forced to take shorts into their inventory because demand took longs. And these market makers don't want this inventory. They don't want it. So that's what created this here. There's another way to know that there was an expansion bar there. It was a major test on the daily tension. It was a major test. And that creates demand because bulls are going to come in and do what they have to do to keep tension away from flopping over. And so that creates expansion bars. This is a really good expansion bar target. It had all the things to say. Did market makers get forced into taking in short inventory they don't want? So you have a grid. You have long, short, good, bad. And so you can get long inventory, short inventory, and both can be good. You get the bad. And what happens is in this expansion bar, that inventory immediately got hedged or placed or whatever into this category. It's bad short inventory. They don't want it. No matter what happens, they want to dump bad inventory, okay? Expansion bar comes back down. On the move back down to test that inventory, we get that zero. Now, look right here, crosses over. We get that bullish signal. So lots of players get excited. They get excited. And we want to see their response to that signal. And you see it, there wasn't really one until here. So again, there's some time between the signal and this. And I think the reason for this delay is because the market's focus is up on a much higher time frame, up on the daily time frames. They're way up here. And these signals are happening on 1 minute charts, which good analysis doesn't have the scope of 1 minute charts. Good analysis pulls data from like day, month. It views data on a 1 minute or 5 minute chart. So you're looking at it minute to minute, but your analysis is up on the daily. And it finds opportunities between. And the scope is daily minimum. So your opportunities are going to be somewhere between a 1 minute and a daily chart. You're like 15 minutes to 2 hours or longer than a day. Your opportunities are not going to be 5 minutes. Those are the wrong opportunities. Don't look for opportunities that, and the reason is because the amount of profits you can make has a functional relationship between the scope of your expectations. If your expectation is to be holding onto a trade for 5 minutes, you can fundamentally know before that trade even moves that you're expecting a point or two max for the life of that analysis trade. You're not going to be, and a point or two just isn't enough. It isn't enough. Being profitable every day can do a lot for your confidence, and it can help you feel like you can participate. And that's a really important step. Don't underestimate the importance of feeling like you are a part of this game and you can do it. That is such a huge and difficult thing to do. Nobody does it because it's hard. But you need to be making amounts that can cover all the taxes, the losses, the paychecks, the everything. You have to be making larger amounts. And you also have to remember that the big players in this game are making huge amounts. Just think for a second. $1 million a year is about $4,000 profit per day trading. Seeing about 4,000 a day, right? So if it's 4,000 a day, and let's say you're going to trade 2 contracts, 40 points a day you have to capture. But I want you to think about this for a second, because you know hedge fund managers are making millions a year. You know that. How much are they looking for? Is it 10 points? Because 10 points times 50, so that's 1 contract, is only $500. So 4,000 divided by, you have to trade a minimum of 8 contracts and catch 10 points a day to make $1 million a year to just keep up. And remember, $1 million a year is their commission, which is probably like 12 to 20% of whatever money they make on top for the company. They're making a good 10 million at least a year. So let's do the math. 10 million. Okay. That's $40,000 a day divided by 50. So you need to make 800 points a day in some way. So I'm pointing this out because if you're constantly thinking about 2 to 3 points, you're in the wrong mindset, meaning that your brain waves are going to sync up with the wrong people. You need to sync up with the guys who are buying here and holding this out, and they're pulling out 20 to 50 points in a market like this. And they're riding it with 100 contracts or 1,000 contracts. You have to link up with those guys. Think like they think. Don't think like the guys who say, I had a 4-hour signal with an RSI right here, and it was a buy, and I got in and got money. It's, well, I'm sorry, you're not the right kind of people. You're the wrong kind of people. You're in the wrong class, social class. So, if you say things like, I have a strat, I got a strat, and it's got a 63% win rate. You're absolutely the wrong kind of people. You sound like a person who needs stimulus checks. That's what you sound like to me. You need them. Okay, so you got to think with the right people, and these people are thinking control over probabilities. These are the kind of people who put out false statements on the news because they know the emotional impact shifts the probabilities in their favor more than the liability of lying to the public. They're just looking at probability maps. It's just game theory to them. And and it's not even complex game theory. It's simple stuff. Okay, so let's get in that mindset. We pop up here. We see the bulls defend here. So let's mark this. We know the bulls were here. The bears come in right here. And their stops are probably, if I was this, I'd probably have my stops not at the gap, but before the gap, because if it's going to close the gap, you know how gappers are. They just go. So it's like, well, if you guys are going to close the gap, I'm probably just going to dump it and let you guys close the gap. Try again later. There's no activity here, so the bears basically get to run this back down. The bulls show up. They get a sample, which is a little unorganized because the volume isn't right with it. The bulls just slam this up. Price-wise, what's important is not 30-minute tension here, because I don't think this sample is what drove this buy. It's daily, and you see daily tension immediately moves up. This is bulls in a big way. And let me qualify that statement, why I say big when I say big way. It was an expected setup. This is important. We knew when the bears would hit and take over the market, the first thing was a zero test. And we knew that the bulls had enjoyed dominance for a while. And so we could deduce that they would defend. And so it was expected. And secondly, they hit. Right as soon as that volume was done, boop, and it never came back. This is bulls in a big way. It's a big deal to be expected to do something and then do it in a big way. So that's a big deal. These guys are operating together. They're working together. It's nonverbal collusion, really is what it is. You have to. Okay, so here's our bulls. Remember, I'm drawing this. There is this thing here, but the deal here was this daily tension. As we move up, we get a sample for the bears, which the volume doesn't happen after, which rolls right back into a bullish sample. Those bears did not get volume before the bulls got a setup. The bulls immediately shove it up. The bears get a little setup here. Their hope is waning, but you see that the bears are starting to get positions here. So here's a rule I haven't covered yet. If I get a signal, right, and I am pending volume, I'm in the pending. Where's the volume? Where's the volume? And then I get a counter signal. I cancel this one. I say, oh, no, you guys didn't get it. Sorry, it leaned back. Now we're on the other guy's team. So that's what happened here. This bear didn't get the signal. I'm trying to move quick because I know the market's closed. It leans back. Bulls get it. Pushes up. Bears get it. Bears are getting shoved back. They're right to their position. Bulls have major root positions down here. This is a hopeless situation, in my opinion. Right here. It's just like, well, what are you guys going to do? Push out daily tension, which has blown up in your face? You're not going to do that. Come on. So we know the stops are probably sitting right about here before the gap close, but if you're going to be conservative, maybe above this pivot here. Okay, moves up, and look what happens. We get right here, so we switch from decay over here. We get some samples, trapped orders show up for the bears. It gives us a couple little lean backs here. You see that? We go boop. Basically, the bulls get a sample right about here. And they just shove it back, and you could see this didn't really cross over, so I'm not going to count that dot because you see how it sort of, it didn't go under and then come back. It's got to be on the other side for me to track it. So this is where we're sitting. We got the bulls here, here, and here. This is their last position. The bears stop loss is here. Conservative ones are probably way up here above like this pivot. And that's the end of the story. That's it. We see this pop up. We see the bulls start to inject some more capital, which is trickling down to the 30-minute time frame, and the 30-minute tension starts to curl up here as price pops. Or sorry, that's this move here. This is troubling because for the bears just gained control of tension. They just did it. They had one day, and I got to give them credit. They did do work. That's important. They did shove price down, and they did get tension to pump further away from zero. This is work. It is not easy to accomplish. You need to defeat somebody. And they did do some work, but that work just led to more bulls. The real work, so this did happen. I'm going to, right in here, there are some very legitimate bears who did as much as they could. The real work they need to do is get that daily tension under zero, and they couldn't pull that off today. And that's the issue that they ended up running into. So the bears did do some work. So I'm going to adjust these lines a little bit here, and then we'll be done. This is the root position for the bulls. This is their highest secondary, about here. Okay, and the bears use this one. If you remember, they have a couple of spots here, right through this area here. We're marking off that one and kind of just taking an average here. They're going to be out there. And the bulls stops are absolutely going to be they're not going to be right under. They're going to be down like this. You're not going to take a 1 tick stop. And the bears stops, since we closed the gap already, we're going to have conservative folks just hanging out up here. The ones who say, this is a major move, go ahead, widen your stop, take a larger loss because confidence is a thing. So we're going to mark these out here. It didn't work. Take it, take it, take it, take it. There we go. So this is our landscape. I'm going to get rid of these ones because I think this whole thing was basically the Great Reset. So right now, what do we need to see tomorrow? So let's get ready for tomorrow. The first thing that you should notice is that 30-minute tension is way away from zero. So the bulls, even if they gap this up and decided to wipe out everyone waiting at these levels, just even like here, tension at best could get up to like -2%. And the next thing they'd have to deal with is a little bearish test there, and the bears will have an opportunity to defend. So between where we are and where we want to be, this could move up and the bears could have a chance to defend 30-minute tension. Okay, so what we need to see tomorrow to get through this problem is we need to see I know what that is. Okay, we need to see in the morning some bears get trapped. So one, we need bears trapped. So watch for this. We want trapped bears coming in the morning. Those trapped bears, their liquidation should line up with, there's no E, pushing 30-minute tension through zero. Best case, bears get trapped, and when they liquidate, 30-minute tension goes whoop through zero, and then they've lost control of 30-minute tension. That would be the best case for the bulls. And then they would grind this all day, and you'd get a bleed. I think that's how that would result, is in a bleed up. It looked like a gap and go, but gap and goes can be deceiving. You need to understand that how they're built. You got to pop it up, trap some bears, get some bulls. So they'd get trapped, and then two, we'd have some quick bulls. I say that because I expect on a gap and go, you'd see bulls just pop in, grab an order, and like you have one chance and that's it. There's nothing the rest of the day. If the market opens lower, let's say it opens lower, there's a really good chance, this isn't huge, but if we open lower, like down here, we could see tension open at, 20% or something like that. It doesn't change the story for me. Still, I think that the bulls have positioned themselves really well into these lows over and over and over. The bears don't have great positioning. They do have a position here. See 30-minute tension popped up. So there could be some lingering bears here, bulls here. So we got to see this happen. I think the bulls defended probability, so I'm more bullish about this now. I was a little bearish until yesterday's close because they had opportunity. But now I'm not seeing that opportunity nearly as clear anymore. This looks just like the market's going to screw with the bears and then shoot this up at some point tomorrow is my expectation. And the next thing, you ready? This is the thing to keep is 30-minute tension to zero. That's the very next thing for the bulls. For the bears, they still need to get daily tension under zero, but it looks like bulls came in and defended. So unless the bears can drive this down and open below today, they're not getting daily tension under zero. And that looks to me like a really tall order that's not going to happen. So I'm bullish going into tomorrow. I think that we could absolutely see overnight session get choppy and be difficult. So, don't just buy into the close and then say, oh, I can't believe it moved down. It's like, well, markets move down overnight. Overall, I'm bullish about this. We can see the bulls. So we could see some movement overnight. It doesn't have to gap up. It doesn't have to gap and go. I just think that makes a lot of sense right here. to get the bulls what they want. And it looks pretty set up for it, if you ask me. So that's my expectation. That's what I'm seeing. I hope this helps. Tomorrow morning, keep it in mind what you're looking for and watch for it. My experience over the years of trading this is that markets give you exactly what you want in the way you don't want it. It is so common to say, I expected the market to dip, and it did. It just did it in a way that shook you. It's so common to say, I expected a buy signal, and then it did, but by the time the buy signal showed up, you had forgotten about it. Or I expected it to blow out the highs, and it did, but somewhere between where you figured that out and when it happened, your boat got all turned around and you were sailing the wrong way or something. So markets tend to give you exactly what they want. One of the biggest tells the market is struggling is that you don't get what you want. You say things like, well, you know, the bears are here, the bulls are here, and I think the bulls are going to do this. That makes a lot of sense to me. And then it doesn't do it. That's when you start going, wait, are the tides changing? That's the way you detect that. You build expectations, and they're not on a whim. I mean, you build an expectation here, and it can be 2 hours to a day. These are old expectations that you're building and developing, and then the market starts betraying those expectations. That's when you say, things are changing. You don't have price go like this and then pop up, and in this moment say, well, price popped up, and I didn't expect that. No, you had an expectation way back here over time here, and then it pops up, and that met or betrayed your expectations. And that's how you detect the trends changing. There is no metric for it. I have never found one, and I have looked at them all. Everything I could come up with. The best way to detect that in real time is to build expectations, and the market meets them over and over and over, and that defines your trend. And when it starts betraying them, you get shifts in volatility where you're, a nice up to sideways or sideways to down or something along those lines, or a reversal. It's all about expectations and whether it meets it or doesn't. And the reason for that is because you are not the market, and it won't ever tell you the truth. So you can't know the truth. The best you can know is your expectations, and that's true enough that it works pretty reliably. Okay, we have our expectations. I went over it as quickly as I could. Review it. Make sure you know what you got your game plan tomorrow. Know what you're looking for. Mark levels on your charts if you got to. Imagine in your head what advanced decline would have to do, what velocity would have to do, so you're ready. So when it happens, you're ready. And then you can participate. But if you're not ready, then signals surprise you, and you become basically triggered. It's trying to trigger you. You should never let a signal trigger you into action, ever. You should say, I was expecting that signal, and so I took it because it was supposed to happen, and it was supposed to happen here. Those are the best. And then it plays out just like you wanted, and you're fairly bored with it because you knew what it was going to do. You knew everything. It was just played according to plan. It wasn't exciting. Okay, guys, I'll be back tomorrow. Shoot me messages. I love to hear your thoughts about what's happening here. Shoot me messages on Twitter or post them in the Discord. This is what I think. Show me screenshots of your charts about what you think, and I'm open to discussion or disagreement or agreement. All right, I'll see you guys tomorrow.